A little worse now, so 160 points gone in the Nifty. When we started the show at 11 a.m., the Nifty was down 130 points. So in the last 45 minutes, we've seen incremental selling to the tune of about 30 points on the Nifty, and the Sensex has now slipped close to 560 points. Names like Bharti Airtel, State Bank of India, L&T, ITC, all of them are now trading at the day's low. One level to track will be the 100-day moving average, 17,906. That's an important level. We're still holding about 35 points above that level. But as you can see from the downward sloping chart since the beginning of trade, there is a lot of pressure that we're currently seeing. Rajesh Baheti is now with us, the Managing Director at Cross Seas Capital Services, on the show now, and Director of ANMI. Rajesh, morning, and thanks so much for joining in. Thoughts on the market, the risk reward? Everyone's saying the first half is going to be challenging. If yes, how do you navigate it?
Yeah, so, the consensus around the world is that the American leadership, as far as stock market returns, is probably ending it. They had a 15-year run. And the Indian markets tend to kind of follow the American markets in leadership because a lot of our stocks are exposed to the American markets, especially the IT sector. The leadership will pass on to the emerging markets, where the gap between India and the other emerging markets is so huge that I think over the next few months, a little bit of that gap leveling is going to play out. So I foresee that the other emerging markets are going to perform a little bit better than India. India may not go down too much because our domestic audience is still pouring money into equities. We don't have too much options because the LRS route not everybody has access to. So from that point of view, I think we'll at best stay here or turn a little negative. The other thing that worries me is there's been a lot of loose talk on capital gains tax, and that doesn't help the market sentiment. So close to the budget.
Sure. Rajesh, hi, good morning, and thanks for joining in. Since technology is the flavor of the day post TCS's numbers, wanted your thoughts. Would you stay away or would you buy into the dip?
So the way I've been playing technology, and last time also said, is it's a good time. Bellwether stocks are down 25 to 40% from the highs. It's a good time to play covered call strategies on this. So you buy the stock and sell out the money calls. I don't think this sector is going to race ahead. Having said that, it's debt free. There's a huge cash flow that these companies continue to churn. So it's always a good bet whenever these stocks are down 25 to 40% from the highs to start nibbling into them and maybe sell out of the money calls, because I don't see the American markets also doing that well, and American companies are upping their spend on IT to the extent that this will lead to 40-50% price appreciation in the price of these stocks. So the best case scenario for these stocks is to buy into them and create a yield by selling out the money calls.
All right, that is on IT. Rajesh, good morning. What do you think of the banking space then? I mean, of course, you've seen a big rally specifically in the PSU banks. But do you think if you were to put some fresh money to play, this area still looks attractive and can still churn out some good returns?
So I still maintain it's a medium-term outperformer, but the rally has been so tremendous and so steep. I think it'll need a breather. We're likely to see a breather now. It's happening already. I think the last few sessions, the bank Nifty is clearly under pressure. Every time it goes up, there's a lot of selling. So I'd say, wait for better levels to get in. But over a period of a year to two, I think this will continue to be an outperforming sector.
Which could be the dark horse in the next 6 months? IT, you said, is unlikely to outperform or race away. PSU banks are likely to take a bit of a breather. Which one would you bet on for the next 6 months, which could give you outsized gains?
As I said, I don't even know if anything will give us gains in the next 6 months. I think it's better to wait for the budget. There's been some talk on capital gains. I hope there's not too much tinkering with that. Everything that makes life simpler is welcome, but just raising taxes is not such a good idea, especially because the whole idea behind a concessional capital gains tax was the securities transaction tax, and now we've slowly crept up in terms of taxes on both. And to further raise taxes on capital gains or changing the holding period from, say, 1 to 2 is not going to help the market. So I think if you're really looking for value, it's better to wait it out a bit. I feel you'll get better numbers in terms of entry prices.
Okay, what about autos? Would you buy auto stocks now, especially these global players like Tata Motors, where things are improving in terms of demand, supply side issues are easing as well?
So it's interesting when you say these global plays, because if you see the PE of Volkswagen, it's at 6. So if you're looking for a global play, why would you look at Tata Motors? Having said that, Tata Motors over the last few cycles, you've seen the domestic cycle not doing well when JLR does well, and vice versa. I think at this time, both of them are coming together. Both of them look positive. So from that point of view, I think it's a stock that could outperform in the next 6 months for sure. Because for the first time, I see both the numbers coming together, and the Tata Motors domestic market in terms of its EVs and its new launches, I think, have been very well received by the market.
Okay, that is on Tata Motors. Rajesh, we'd love to chat some more, but unfortunately we're out of time. So thank you very much for joining us and taking us through your call on the market and some of these individual pockets as well. With that, it's time for a short break on this show, but there's lots more market action coming up for you in just a bit.